People often talk about how unbearably difficult it is to earn the first million. This statement hides not just a complaint about hard labor, but an intuitive understanding of the physics of finance. They are absolutely right. The first million is not just a number in a bank account. It is overcoming gravitational pull. It is a struggle against inertia, against one's own habits, against one's environment, and, most importantly, against the lack of initial mass. But here's the paradox that most people realize only when gray hair already covers their temples and time is irretrievably lost. The second million comes differently. It appears not just faster, it materializes with frightening, almost magical speed. The difference between the first and second million is not a difference in effort. It is a difference in the laws of physics under which your capital exists. This happens not because you suddenly become a genius. Your IQ does not jump 50 points as soon as the sixth zero appears on the account. You do not acquire the gift of foresight and do not start reading the market's thoughts. The reason lies elsewhere. The most powerful and underestimated force in the universe enters the game: compound interest. Finally, after long years of pushing the stone, it begins to take on the heavy lifting. We live in an era that worships the cult of speed. Everyone craves instant enrichment, quick results, explosive growth. But the truth, cold and unyielding, is that real wealth never moves in a straight line. The capital growth chart is not a diagonal line aiming for the sky. It is an exponential curve. At first it crawls, barely lifting off the coordinate axis. Then it walks uncertainly. And only later, decades later, does it break into a sprint that takes your breath away. The first few years of capital accumulation resemble an attempt to move a huge boulder up a mountain using only a teaspoon as a lever. You sweat. You deny yourself everything. You work yourself to the bone, and the stone barely moves a millimeter. It seems that the efforts are disproportionate to the result. But one day, something incredible happens. Gravity changes its vector. The boulder starts rolling on its own. The inertia that used to be your enemy becomes your best ally. The tragedy of most people is that they give up moments before this reversal happens. They quit, convinced that the game is broken, that the system is rigged against them. But the only thing that was broken was their patience, the great waiting and the illusion of boredom. When I made my first serious money, the world expected a predictable spectacle of consumption from me. Society dictates the script: buy a new house, upgrade your car, demonstrate your status. This is a trap that almost all the nouveau riche fall into. I acted differently. I didn't buy liabilities. I bought more assets. I took what I earned with sweat and blood and sent it back into the furnace of investment. And then I did what the modern generation hates to hear. I began to wait. This is the part of the equation no one wants to discuss. Waiting. It sounds simple, but in practice it is excruciating. Why? Because in the initial stage, the work of compound interest looks boring to death. You look at the numbers, and they seem mockingly static. 1 million turns into 1,050,000, then into 1.1 million. You look at this and think, is that all? I sacrificed years of my life for this? This is exactly where most characters break. People do not understand the nature of exponential growth. They see 1.1 million and get disappointed. But give this process time, give it air. In 10 years, this amount will double. In 20 years, it will quadruple. In 30 years, the numbers will become absurd, incomprehensible to the average mind. And by that moment, you realize a startling fact. It is no longer you earning the money. It is your money earning money. And they do it with a speed and efficiency that you, as a biological unit, could not even dream of. The first million is made of your sweat, your nerves, and your time. The second million is pure mathematics. I have seen countless brilliant young people who earned crazy money with incredible speed, only to burn it even faster. They looked for shortcuts. They believed they found a loophole in the system. But shortcuts are the most expensive routes on earth. They did not learn a simple rule. As soon as you reach escape velocity, wealth begins to multiply without your permission. But to reach this point, you must survive the dead zone, that long, painful, invisible period when it seems that absolutely nothing is happening. It is in this silence, in this seeming stagnation, that character is tempered. That is why most fail. People chronically underestimate the time factor. They overestimate the role of luck and intellect, but catastrophically fail to understand exponential growth. The second million does not require double the effort from you. On the contrary, it comes 10 times easier because compound interest is non-linear. It is like watching paint dry day after day, year after year, until one day you turn around and realize you have built a cathedral. Discipline versus intellect. Here's the main mistake people make regarding investing. They think compound interest is a financial trick, a secret formula, or a complex investment strategy. It is not. Compound interest is not mathematics. It is a behavioral advantage. The market rewards not the brilliance of the mind, but consistency. Discipline beats high IQ every single day. It is a quiet, unnoticeable process. There are no fireworks, no applause, no instant dopamine hits that the modern brain, raised on social networks, is so used to. And therein lies the main problem. The world is full of people who organically cannot stand boredom. They are ready to exchange a guaranteed fortune in the future for a tiny dose of thrills. Today they sell shares of magnificent companies that double every decade to chase another cryptocurrency or hyped startup promising to double every week. They cannot restrain themselves. It is human nature. We evolved to react to movement, to hunt, to run. But human nature is the main enemy of compound interest. When Warren Buffett and I started, we were not geniuses. We did not possess secret knowledge. We were simply stubborn enough to let time do its work. While everyone else was busy predicting recessions, analyzing charts, and panicking over newspaper headlines, we were busy simply holding on to good businesses. We did not strive to be fast. We did not need to be the smartest in the room. We just needed to be right for long enough. Money, like gravity, starts working for you only when a critical mass accumulates. Imagine you start with 1 million. At a yield of 10% per annum, it doubles in just over 7 years. At this moment, just by existing, your capital brings you 100,000 a year. You didn't lift a finger for this. Another 7 years pass, and the capital doubles again to 4 million. Now it generates 400,000 a year. Ask yourself a question. Did you start working 4 times harder? Did you become 4 times smarter? No, you just waited. But this is exactly the part no one wants to believe in. People want to hack the system. They want passive income right now, without years of active discipline and self-restraint. But the universe doesn't work that way. I once said a phrase that became famous. The big money is not in the buying and selling, but in the waiting. People laugh at this, nod their heads, but deep down they don't understand. They laugh until they realize how pitifully few investors are actually capable of simply waiting. Most cannot hold a stock for even 4 months, let alone 4 decades. They think patience is a virtue of monks. They are wrong. Patience is a virtue of millionaires. The difference between 1 million and 2 million is not a difference in knowledge gained in business school. It is a difference in temperament. It is the ability to sit still with your arms crossed while everyone around is running in circles trying to outsmart the market. The market loves to siphon money from the impatient to the patient. This is the only real secret no one talks about in trading courses. You don't need to be faster, smarter, or luckier. You just need to stay in the game long enough for time to start working for you, rather than against you. The enemies of accumulation. The tragedy lies in the fact that most people never see the phase of exponential growth. They change strategies exactly moments before the curve shoots upward. They switch between funds, chase trends, complain that getting rich takes too long. They forget the old military wisdom. Slow is smooth, and smooth is fast. When people ask me, "Charlie, how do I double my money?" I answer, "Sit still for long enough." The rich get richer not thanks to gambling, but thanks to endurance. Not thanks to brilliant insights, but thanks to well-tolerated boredom. You won't believe how quickly 1 million becomes 2, but only on one condition. If you stop interrupting this process. Everyone says they believe in compound interest until they have to sit it out. Then they get bored, anxious, or worst of all, they start considering themselves too smart. Patience sounds noble in theory, but in practice, it feels like torture. You stand still while it seems everyone around is winning the lottery. Humans are not built for this. We are built to react, grab, run away. But investing punishes movement. Every extra movement costs you commissions, taxes, and most importantly, breaks the magic of compound interest. Here is the paradox. In most areas of life, to get more, you need to do more. In investing, the less you do, the more you get. When I was younger, I thought intellect was the key to success. Later, I realized intellect without patience is like a Ferrari engine without fuel. It doesn't matter how powerful your car is if you can't keep it on the road. The market tests your emotional resilience much harder than your IQ. You will see mediocre investors catching luck by the tail. You will see bubbles inflating and idiots getting rich before your eyes. You will feel an unbearable itch to do at least something. That is the moment you lose, because compound interest only works when you don't touch it. The desire to act, tweak, optimize, trade. That is what destroys most portfolios. The world is full of smart people who cannot sit on their hands. They become restless, and the market feeds on their impatience. They chase new ideas like babies, chasing shiny toys, and end up in intellectual and financial bankruptcy. You need to make peace with inaction. You need to learn to enjoy boredom. You need to accept that for some time, you will look stupid in the eyes of others. This is incredibly difficult in a culture obsessed with speed and outward activity. Everyone wants instant gratification, instant recognition. Patience has become an antique virtue. But money doesn't care about your deadlines. It grows on its own schedule. not yours. Warren and I love to joke that our favorite holding period is forever. And we weren't joking. We just understood that real money is made in waiting, not in forecasting. The valley of death and the test of character. People imagine the process of accumulation as a peaceful walk up a mountain. This is an illusion. It is a long, dreary, often uncomfortable process that tests your self-control for strength. You will doubt yourself. You will question your strategy. You will envy those who seemingly move faster. And it is in these moments that real selection happens. Patience is not passivity. It is a skill. It is active resistance to stupidity, envy, and fear. When markets fall, patience feels like physical pain. When they rise, patience feels like a missed opportunity. In any case, you will feel wrong. That is why so few people become truly rich thanks to compound interest. They cannot withstand the emotional silence of doing nothing. But let me tell you something important. Doing nothing is not the same as idleness. It is a conscious decision. It is an act of will. It is a statement. I made my choice. I planted the seed. And now I will let time and nature do the rest. When you invest in a good business, you have already done 99% of the work. The remaining 1% is simply endurance. It's like planting an oak tree. You can't dig it up every week to check the roots. But that is exactly what most investors do. They uproot their own success. People talk about timing the market. I talk about time in the market. The first is reading tea leaves. The second is a mathematical inevitability. And over a distance of a decade, this is the only difference that matters. The modern investor is an action junkie. He refreshes his brokerage app every morning like a social media feed. He seeks dopamine, not dividends. But the market doesn't pay for excitement. It pays for discipline. The best investors I knew shared one common trait. They were emotionally boring. They didn't react to headlines. They didn't panic over volatility. They didn't confuse information noise with real signals. This dullness of feelings is a superpower. It allows one to sit out storms and claim the reward. In 2008, when the world was collapsing and everyone was panicking, Warren and I weren't running around screaming, trying to catch the bottom. We were looking for good businesses that would survive. We knew time would heal the wounds. It always happens. If you own productive assets and avoid stupidity, compound interest will take care of the rest. If you want your million to turn into 2, don't try to outsmart the process. Wait it out. Patience turns knowledge into wealth. Without it, you are just another smart person without money. The 3 horsemen of the financial apocalypse. Why can't people hold on to wealth long enough for it to start working? They lose not because they choose bad stocks. They lose because they choose bad habits. Let's break down the main enemies. First, impatience. People want the reward without the waiting. They want to double their capital every year, not every decade. So they start gambling. They call it investing. But in reality, it's slot machines with better lighting. The first rule of compound interest is survival. You cannot multiply 0. Dead money doesn't grow. Most kill their capital with impatience and overconfidence. They buy at the highs, sell in panic, and then blame the market. But the market didn't rob them. They were robbed by their own temperament. To get what you want, you must deserve it. Patience is part of the entry fee. The second killer is debt. Debt is the antimatter of time. It turns compound interest against you. You rejoice that you earned 10% on the stock market while your credit card eats up 20%. This is not investing. This is bailing water out of a sinking boat with a teacup. I have seen brilliant people who built a fortune and lost everything due to an inability to resist leverage. They thought debt was an accelerator, but debt only amplifies the consequences of both good and bad decisions. And since people make mistakes more often, debt multiplies stupidity faster than compound interest multiplies wealth. The third, and perhaps most insidious enemy, is envy. Envy destroys rationality. You see a neighbor who made money on some ridiculous crypto token, NFT, or tulips depending on the century, and you think, maybe I should get into that too. This thought has destroyed more capital than all recessions combined. Envy pushes you out of your circle of competence. It forces you to abandon what you understand, to chase what you know nothing about. Compound interest requires focus. Envy breaks focus. As soon as focus is lost, the magic disappears. And there is one more mistake: excessive diversification. This will make index fund adepts nervous. But listen, if you own 50 mediocre companies, you don't have diversification. You have diworsification, diversification of ignorance. You have chaos in your portfolio. It is much better to know a few things deeply than many things superficially. We didn't build Berkshire by buying everything in sight. We built it by owning a few great businesses for a very long time. Concentration allows compound interest to work at full power. Diversification makes sense only when you don't know what you are doing. If that is your case, fine. Buy the index. But don't pretend it's genius. It's just insurance against your own incompetence. And finally, lifestyle inflation. The moment people start earning, they start spending. A new car, a bigger house, expensive vacations. They destroy the capital base before it has time to grow. I call this anti-compounding. They plant a tree and then chop it for firewood every 5 years. You cannot build wealth if you constantly reset the timer. The first million is not meant for spending. It is meant for work. Metamorphosis and freedom. Money is a snowball. You must start early, roll it patiently, and never, do you hear me? Never stop halfway down the mountain. Most people quit on the gentle slope when progress seems slow. They underestimate time and overestimate their cunning. They forget the harshest truth in finance. Wealth rewards endurance, not genius. Look at the history of great fortunes. They were not created by people who constantly jumped in and out of the market. They were created by people who bought good assets and sat out decades of boredom, panic, and noise. Every compound interest curve looks flat at the beginning. This is a test. You will feel like a fool, but that is the price of the ticket. And if you can stay in the game without losing money, without blowing up the account, without succumbing to greed, time will take over the controls. The formula is brutally simple. Avoid debt. Avoid envy. Let time do the rest. The irony is that it is precisely simplicity that makes this path so difficult. Everyone wants to feel smart, but compound interest does not reward smarty pants. It rewards restraint. The first million is like lifting a boulder with bare hands. Every inch causes pain. Every mistake seems fatal. Progress is invisible. You think the mountain is endless. You don't see that the slope levels out right after the next ridge. But this agonizing climb is not a system error. It is a feature. It is a filter weeding out tourists from real players. When Warren and I say the first $100,000 is the hardest, we aren't joking. In this period, you have no inertia. Everything rests only on your muscles, on your personal discipline. This is the moment of truth. Who are you? The one who can live below their means for 10 years? The one who can say no when everyone says yes? Can you endure years of underappreciation? If yes, congratulations. You are a statistical rarity. Most won't even survive the boredom, let alone the hardships. The first million isn't about money. It's about behavior. It is a proving ground where habits are forged that will protect your every dollar in the future. When I was young, I learned a lesson. The pain of discipline weighs ounces, while the pain of regret weighs tons. Here is the real secret that isn't in any textbook. Boredom is your moat. It protects you from the crowd, and the crowd always loses. When everyone is chasing action, the ability to be bored becomes a form of courage. It takes courage to sit quietly when everyone is screaming about a crisis or an opportunity. It takes wisdom to say, I don't need to do anything today. When compound interest finally kicks in, it doesn't feel like greed. It feels like peace. You no longer have to prove anything to anyone. You don't need to rush. The machine is already working. It is at this stage that the second million comes faster than you could imagine. But this is not luck. It is a delayed reward for 10,000 small, boring, correct decisions. It is the result of you not being stupid for a very long time. People think genius is needed. No, endurance is needed. I have seen many ruined geniuses, but I have never seen a truly patient person who failed at compound interest. If compound interest is the 8th wonder of the world, then human stupidity is the 9th, and it is encountered more often. Compound interest is built over decades. Stupidity destroys instantly. You lay bricks for 30 years, and one idiotic decision blows down the whole house. Such is the ratio. Slow growth, rapid ruin. Our success at Berkshire is not that we are smarter than everyone else, but that we tried not to be idiots. Most want to shine. They want to outplay, overthink, outsmart. They cannot stand the thought of being ordinary but right. They would prefer to be brilliant and wrong. And the market eats such people alive because compound interest hates drama. Epilogue. Partnership with time. Your real job as an investor is not to find the next great thing. Your job is to avoid the next stupid thing. If you do this long enough, the math will take care of everything else. Time. The most faithful partner you will ever have. It doesn't cheat, doesn't panic, doesn't get emotional. It just comes day after day, ready to multiply what you give it. But most people treat time as an enemy. They rush it, fight it, kill it. You cannot negotiate with time. You cannot cheat it. You can only cooperate. When you cooperate with time, life slows down in a good way. You stop looking at the scoreboard every day. You realize that the right question isn't, how do I get rich? But how do I keep my sanity while I get rich? Because sanity in this world is undervalued. Wealth without peace is just another form of poverty. And the road to peace is paved with patience. To become rich is arithmetic. To stay rich is temperament. Living well is character. If you master all three components, time will become your servant, not a predator. 10% a year sounds modest, but over 40 years it will increase your money 45 times. It is not impressive until it becomes reality. The trouble is that people don't live in one strategy long enough to see this result. They change lanes looking for a fast ride, but wealth is created only by those who stay in their lane. Ultimately, it all comes down to a simple choice. You can feed your thirst for action, your ego, and your impatience. Or you can feed your future with boredom, discipline, and time. When people ask how we did it, I answer the truth. I just stopped doing stupid things and gave time a chance to do its job. The greatest irony of wealth is that the most grandiose results come from the simplest behavior. The world won't understand this because the world has no patience. But you will understand because you stayed, you endured. You allowed time to make you rich without losing your mind or your soul. That is the end game. Not just money, but wisdom. Not just growth, but peace. If you have both, you have won the only game worth playing.